Hello, it is Evan here from the Trade Risk on Friday, November 29th, 2024. Hope everybody had a wonderful Thanksgiving holiday. I am on the road. I'm on a different setup. I'm realizing my on the road setup isn't so polished, so please bear with me on this week's episode. We're going to keep things very brief anyhow. I got a couple of notes on just a few charts, a few things I want to look at. Before we get into the charts and the data, I do want to remind everyone once again that Trade Risk is running its Black Friday sale right now. It ends tomorrow. We're going to put links in the description of this video, so definitely check that out before the sale expires. Also, our sponsor, Investors Business Daily, they are running their Black Friday sale. We're going to put that link in the description of the show. They do support the show. They are our sponsor, and they've got some good sales running. So check that out as well to get those discounts for the new year. Now, let's get into the key kind of data headlines, takeaways from this week. So if we look here at the right-hand column, it was a nice up green week across the board for the U.S. stock market, once again led by the Russell 2000. If we take a look at the one-month returns, you can see now that the Russell 2000 is up almost 10%. So it is kind of romping and stomping all of the other major indices. And if we move ourselves over to just market breadth generally, and we take a look at 52-week highs and lows, you can see that this ratio continues to be pretty supportive of just broad participation right now. The average stock, not necessarily the largest stocks, are doing well, generally speaking, in this environment. If we take a look at our sector overview, you can see that once again, almost every sector here in the green energy was the standalone, down almost 2% this week, which was notable if you were concentrated there. But generally speaking, we had some good performance here across most of the other indices. Now, let's just zoom right in and take a look at some of the other important takeaways this week. So S&P 500 back at new all-time closing highs. That was notable this week. We basically went sideways here. It's a short week, of course, with markets closed Thursday, half day Friday. So volume is going to be very light this week generally across the board. But we got new S&P 500 closing highs. We got new Dow Jones all-time closing highs. If we take a look at the Qs, we're not quite there, but it is firming back up. Remember, we talked about this level right in here, this 504 line in the sand. That was approximately the July highs from earlier this year. And we are holding above it. We're basing above it. We're grinding above it. So let's see if that can continue. Russell 2000, though, back towards its cycle highs here and all-time highs as it well, I guess it might just slightly be underneath the 2021 levels, but it's basically at all-time highs here. So we're going to want to keep a close eye on this as well. Still think Russell 2000 has some runway to float here into the year end, my personal belief, but we're going to keep a close eye on that. I think, apart from the all-time highs in the Dow and the spot and the S&P 500, notably here this week was Treasury yields. So if we look at our favorite bond fund here, so IEF, this is the 10-year Treasury bond. So moving inverse into the yields, and you can see that we are now starting to break up and convincingly break this downtrend that we were in for really 3 months nearly since topping out in September. So we were in this kind of very grind slog lower here, and we broke through that this week on Monday. And we saw digestion Tuesday, follow through up Wednesday, and then follow through up on Friday. So this is nice to see. This is going to bring a little bit of fresh of breath air, I believe, into the market, going to help support those small caps that are starting to break out. So that is notable. You could look at the TLT as well. So the long bond continuing to do well here. So breaking down trend lines. Let's see if this is more than just a dead cat counter trend bounce. We did see some heavy volumes, over the last couple of weeks, not this week, but so we've got some potential, some signs there that there might be some bottoming action for those treasury bonds. Last but not least, I want to just round out with Apple, notably here, really sort of grinding up, kind of floating higher here and looking like it wants to break out and just kind of trend here. So it did make an all-time closing high on Friday this week, and it's been consolidating since July in this range, right? So this looks better than the Qs, for instance. This looks better than tech on on average, and Apple is starting to grind back up here, and it's a little bit of a sleeper. It's a huge company at this point. Volatility is lower, but is certainly looking good here. Meanwhile, NVDA was down this week. It was down 2.6%. Remember, it had earnings last week. We talked about a lot of the dislike here, a lot of the potential to maybe roll over or underperform. This 141 zone was kind of the key area I was keying off of. Right now, it's below it, right? So it's in the penalty box in my mind. If we can start with some authority here, kind of shooting above this 141, I would start to like it more, or at least not be as negative about it. But if we're sitting below 141, I do want to be pretty cautious there. Last but not least, if we look at Bitcoin, so Bitcoin had a digestion week. It was technically, I believe, an inside week. It was a full range inside week, so we almost covered the exact range from last week. We came all the way down, had about a 8 or 10% correction, I believe. We almost got up to that 100K level. We came all the way down to 90,000, almost 90,000 even. And now we rebounded into the end of the week up around 97K. So a little bit of digestion here. It's had 3 strong weeks up. It's in its breakout mode. It's got a big round number of 100K that everyone's staring at. So a little bit of pause here and taking its time, but the trends are certainly still up. Have some good reference levels now, upper levels to use if you're managing risk in Bitcoin. Call it the lows of this week around, let's say, 90K even. That's a good spot to have some lines in the sand to measure and manage risk. So we're going to keep it there. Very short, very actionable. That's what I was noticing. Again, it was a pretty slow week out there. We'll be back with our usual schedule next week. Hope, again, you had a wonderful holiday, enjoyed some time away from markets. Don't forget, check out those links in the description of our show for those sales discounts on trade risk products and IBD as well. So take care. We'll see you back there next Friday.